Good morning, fellow option traders. This is Jeff, and this is the daily scan for January 7th, 2013. Today is the Monday and the first full week of the trading year. It should be a pretty interesting one. I want to show you something here first. Some of you probably know about this feature in Thinkorswim, but you can take in your over here on the watch spreads, if you click on that, you can separate your holdings out by what type of spread it is when you entered the order. So we have a vertical in Apple, which is basically what a credit spread is a vertical. So we can separate that out from our leftover worthless. As you can see here, worthless, it's only worth a penny. Long positions on the Qs from our calendar that we entered into for our insurance policy. We're going to take full loss on that. We did make a little bit when we sold the long puts last month, I believe. So we're not taking a total $140 loss here, but Apple's up here at 68.50. We'll look over at the Analyze tab at Apple, click on it here. And we're doing pretty good. We're max profits 159, and we are at 68. So Apple continues its slide down. Last week it threatened to get to our break even, and then it reversed and went back down again. Next is the Profit 10 portfolio. Take a look at that over here on the Monitor tab. And last week we entered into this one. See, they got it. See, I don't like looking at it that way here. So we'll uncheck that vertical and we'll just look at it all together. So we're looking at a delta of 8 on the Qs, which is pretty good, I would say. But we need to get rid of that insurance policy here too in order to make it look better. And we'll do that when we get over to the Analyze tab. And RUT is a little bit hot here with delta. There's a lot of upside risk. And some of that is because last week we did a bear call, a new one for February up here at 910 and 920, and we will close that up into an iron condor in another couple of days after we figure out if the market's going to pull back a little bit first or not. I suspect it will. I think it's going to probably retrace back a little bit, somewhat. And let's take a look at that. We will look at RUT itself. So what I'm looking for here on this daily chart is a pullback and retest of this resistance here from December 20th. That's typically what happens if it's going to continue marching up. It may just do this little pullback here. Of course, it may not. It may just pause and continue. But there's a good possibility that it will come back down here and retest. So what does that mean for us from a risk perspective? Here's all of our RUT stuff. Okay, we're up here. Probably going to be closing one of these iron condors this week simply because expiration for a lot of this is the following week. So it's time to start exiting this. And we will exit the one with the highest risk first. So if we're looking at our highest risk call here, and that's a short, and that's paired up with this long, and the lowest short put, which is this one, And there's 10 points away is this one. So this is the iron condor that it has the most risk right now. And we will exit out of that one this week. May just close the call side. We leave the put side going here. Of course, it's at 80's the max. We're at 83, so we'll probably just leave that rather than incur any transaction costs. And I'm not sure. Let's take a look here and see what the puts are worth. None of them are down below a nickel yet, so we'll watch those. This 750 put may go below a nickel, and we will be able to eliminate the risk there by closing that, but we may just let it slide rather than, I mean, I don't think there's really any risk in that particular trade. If we look at 740 and 750, look at where we are here. We are, you know, as many as 880 to 750. Yeah, there's no risk there. Okay, so that's what we'll be doing. And the same thing with the Qs. We're going to be looking at that later today, and we'll cover that tomorrow or later this week, because I wanted to get to our scans today. A little bit of a market here. Basically, this is indicating a flat open with a little bit of bias to the downside. VIX is at 13, at 13.8. That's pretty dang low. Very hard to find any premium out there, you know, for like an iron condor or something, because you have to bring it in so close. So probably in this type of a situation here, unless we get some additional volatility, we're probably going to hold off a little bit on doing anything until we get back up, you know, like 14.5 or maybe 15. We'll see. It's tough, you know, to find good trades. Now, at the money, credit spreads or debit spreads, you know, and directional trades, at that point, those are the only thing that really makes any sense in a low volatility environment like this, or maybe a calendar or two, you know, if you want to take a guess at where something's going to move to. So that has possibilities, and I'll be taking a look at that today too, and let you know my thoughts tomorrow. All right, let's get to the A+ list. First, we'll start with Apple. Jump over to the charts. Yep, Apple is definitely reversed from this gap up here. It's just, it's not destined to go anywhere. You know, in the long term, it's strange that the move up was so powerful that this long term is having trouble rolling over this 50 MA. So that may be happening soon. And this, I'm going to take this off of here because we can see we're patient, we wait, and we would see that a bullish play on this weekly long term here would have been a mistake. So I'm going to take this off. We don't want to, you know, be distracted by that. So we're in a whole new environment here, and we may add a weekly on this because today's Monday. It's a good time to take a look at weeklies. So we may do something on the weeklies here. Let's take a look at what we could do. We're in the Analyze tab. I know, like the guys at Thinkorswim, they like to go to the Trade tab, and if they like a trade, then they'll say bring it over to the Analyze tab, and I say, well, why bother with that? You know, in the Trade tab, you got everything right here with the Add Simulated Trades, which is probably why they did that. I think it's just a habit that they have, because older versions, I mean, way back when in Thinkorswim, you had the risk profile. You didn't have the Add a Simulated Trade in the risk profile. So I think it's just a habit that they have. Okay, weeklies. This is the weekly that we could be looking at here. And I mentioned that like an at-the-money credit or debit spread really doesn't matter a whole heck of a lot. And let's take a look. If we're looking at, if we're bearish, we'll do a credit spread on the call side. And if we're, even if we're bearish and want to do a debit spread, we would do that on the put side. Let's look at this one. You can see that they're pretty much priced the same. It doesn't really matter. It's whatever your druthers are, I guess you might say. And they both have the same amount of risk. This, you're already putting your risk out on the table when you buy it. So your $253 risk is out there already. And on this one, you're taking a credit, but you still have the same amount of risk. Now let's take a look at that. We have $258 of risk here. And since we're buying this for $247, that's how much risk we have. So it's $253 here in risk. So you can see it's pretty much the same. It doesn't matter. The plot on the chart is incredibly, I mean, even when you bring them together. So you can see it doesn't matter if you want to do a credit or debit spread. I just feel better with a credit spread because you're collecting the money, but actually you're putting a slight amount more risk into your debit spread, but your return's a little bit bigger. Alright, back to the scan. Let's take a look at AMZN. Too flat here, although we're starting to move up. So if we're starting a stronger uptrend, we need to wait for our stochastic to come down and give us a trigger. On the longer term, this could be considered a trigger here. This is a secondary entry trigger with %K coming down below 45 and then moving back up. Would like to wait to see here if we get an entry point, say we break above this previous high for a longer term trade. So let's just put an alert in there, and we'll just see how things work out for a longer term trade. Let's take a look at it if it goes above it during the day today. All right, Baidu. Baidu's in a downtrend, and I think that this is a good one for a bear call credit spread. So let's look for, let's go over to this chart here, and we'll put it on this one. And we're looking for something that, a movement below that. Oops. So, alert. Last, and we want it below. Okay. Next. CF. I don't think we got our trigger on this one. Yeah, we were looking for a bear call on this, and we never got our alert. So we were looking for a long-time bull put, and long-term bull put. We got to move up here. I'll take this off of here. We definitely are getting some confirmation on this chart. So, are we going to get movement above that? We're re-alerting CF. Chipotle. Okay, midterm, we have a move up here. No trigger here though, and no trigger here. So Chipotle, we are not seeing anything right now. Salesforce, no triggers at all. It's in an uptrend. We need it to pull back more. We need %K to get down below this 45 line before we consider anything on that. Google just changed into an uptrend. We're looking for the first retrace after that uptrend. The first retrace meaning a pullback, and a pullback on the stochastic, and then some confirmation on some of our other indicators like the MACD, etc. So we're just waiting there. MasterCard is already traded today. It's in an uptrend, medium and long term, but no triggers. Okay. Price line. This price line scares me. I'm going to look at maybe doing some straddles on price line. So stay tuned for that. It seems with all these gappy stuff, let me see if there's a possibility of doing anything here. It's saying that there's a plus or minus 17 point move on this here as we look at, and this is on a weekly basis, 27 on a monthly basis, 50 if you go out 2 months. Oh, yeah. Is there a straddle in your future? Well, let's take a look here. Just take a quick look. Yeah, got too many strikes open here. But all right, we'll go to February. Okay, it's going to cost $48, and our break-evens are at $5.96 and $6.93. So let's set slices to chart. And let's take a look here. Seriously? There's something wrong there. Huh. Don't you think that there's something wrong there? I'll have to figure this out later. I'll figure it out later today. There's something goofy going on there. Ooh, let's look at the current price. It's saying at the money is 648. 648, yeah. Oh, you know what? There we go. There we go. All right. That's a lot of movement, ladies and gentlemen. No, that's not going to really, that doesn't make any sense to me. Let's just forget about that. Panera. We still have an alert here. We were looking for a move down. We can slide this up, which is what we'll do below Friday. This is Friday's low here, so we're still looking for a move down, and then we still need confirmation after that. And that is it for today. Ran a little bit over. Sorry about that. But I'd like to thank you for watching. Have a great day and happy trading.